Hello and welcome to the special segment called MC Pro Stock of the Day with me, Stacey Pereira. In this segment, we bring you some fundamentally strong stock ideas that you could consider in your portfolio. Today, I have for you GAIL, which is an integrated natural gas company. It is present in transmission, LPG, petrochemicals, E&P, CGD as well as renewables. In fact, it owns about 70% of the gas pipelines in India, and more pipelines are expected and is under construction. So what are the potential growth drivers here? Let's see first the rising gas demand in India. Now, the government's policy support has helped with visibility in terms of demand as well as supply. And India's gas consumption is set to rise from just about 7% to 15% in the whole energy mix by 2030. And GAIL then will be one of the key players in the development of India's gas grid. Moving on, you also have volume growth as well as the tariff revision, which will drive the transmission revenue as well as profits. We do expect some strong volume growth in the next 2 to 3 years, and we're factoring in a 14 to 15% full year volume growth for FY24. We are also expecting to see major pipeline projects being commissioned, and that could take place anytime in FY24 or FY25. And if you look at the international gas prices, those too have softened up, and that in turn will go on to aid their margins. LNG prices are likely to hover around that $8 to $10 per MMBTU. And the domestic gas prices too, that demand recovery is picking up and will sustain in FY25 as well. Another driver is the 10-year supply contract with Vitol, which can help in the shortage of petrochemical operations. And GAIL's Henry Hub gas contract, that too offers some good spread on the gas marketing business. Let's look at the stock's performance in the last quarter. Now, the Petrochem losses have come down quite sharply, and we do expect that in FY25, the exit will either be a break-even or even see some bit of profits. The strong gas marketing margins in transmission will also add to the profitability. Transmission volume will be about 124 million metric standard cubic meters per day in FY24, and it is expected to go up to 133 MMSCMD in FY25. The gas marketing EBITDA too is seen at about 4,000 crore rupees in FY25. And the EBITDA margins are back in those double-digit numbers. Now, if you were to consider the stock's valuation, it is quite reasonably priced, trading at an FY25 PE of 8.8 times. All the negatives are pretty much already factored in, and which is why this could be a good buying opportunity at the current levels. So, are there any risks involved or factors you need to be watching out for? Do keep a lookout for the rise in LNG prices as well as a lower recovery in the petrochemical business. With that, it's a wrap. Thanks so much for tuning in.